Okay, here we are. Test, audio test. Okay, seems like we are live. Finally, audio is working. So this is sorted. We can start to have a look at the markets. All right then. It's half an hour before New York Open, so we can have a look. I already did my analysis for the day, and so we already have had a trade opportunity, and I entered right here on this green candle closure, and unfortunately I did not check on the 5 minutes, because the 5 minute at that time closed bearish. So the next 5 minutes actually went on to close bullish, but it took again the previous low. So this basically stopped me out, but yeah, I put the stop at break even, so I didn't lose any money on this. But this had to be expected, because if the reversal candle is not strong per se, we can say another take of the low, in this case of the low, it has to be expected. Now, this is not to happen every single time. In fact, yes, when we go and check at the same price action at the time, in the moment, it did the same thing. It closed the same 5 minutes candle. You can see the reference above, the cursor, the crosshair. It goes in the same candle. So this closed bearish, but the next bullish candle did not take the low again. So a stop loss below here would have been safe to place. Anyways, this is something to note during London session. We could have a great entry trigger at our level, as you can see now. Back in the time, this was not here. Okay, so what happened? I just saw level being tapped, which was previous day value area low, and the A session point of control, and the overnight low being taken on NQ. This did not happen on ES. This made me a little bit worried. That's why I put the stop at break even. But nevertheless, this gave a trade, and as the level was tapped, the next 1 minute candle closed bullish, and I entered right at the open of the next candle. This is a valid trade, although this reversed in my face, to make a new low and close the next 5 minutes bullish. So here, technically, I could have entered again another trade, as because I was stopped out in this break even, but I got distracted because I was trying to make the live stream going, and I had plenty of problems with my internet connection, and then the microphone was not working, and so on and so forth. So that being said, this trade is gone. We're not gonna cry about it. There are gonna be more, although this was a good opportunity, I must admit. Like let's not say that we would have taken, yeah, let's say we would have taken the next 1 minute candle. I mean, this would have been to the top 11 risk to reward ratio, so not bad at all. Anyways, okay, so just to have an overview for all of you, watch what we're looking at. Let's hide everything. I know there are a lot of lines in the chart. It seems to be messy, but trust me, it's not. And now we're gonna get to the daily chart and see. Yesterday we closed bearish up at the highs of this uptrend and at the highs of this big consolidation range. With that, we can say it started back when we had the rollover of the contracts. Okay, so from there we went up and down, taking highs and lows, and this was the tariff scariness of Trump, and then more consolidation, and now we're trading up at the highs. So two things might happen. Of course, you can say, of course, always, but yeah, basically we can say two things might happen. The first thing is we're gonna take previous day lows. Do this. Let's quickly. Let's clean up this, and then we slowly add everything back in. Okay, so where was I? So what we can expect is for this week, so on the weekly chart, for this week to actually pierce through the weekly high that we put on Friday. That Friday I think we all remember where the market tanked 3% in a few hours. So either we're gonna revisit those highs and take the liquidity up there, or we're gonna dump because we are at the range high. Okay, so it's not easy to predict. What we can do is to analyze the market the most detached and rationally we can, and from there we can take the highest probability trades and see and aim for the targets. But yeah, we would not know until it happens what's gonna happen. There's no way we're gonna be able to do that. So what are we gonna do then? Well, below this low here there are stops, positions, liquidity, and a big row of single prints which will act as support, as it already did here, and this series of supply and demand here that will act as support. Okay, so immediately it stands out that a fake out of the mini range, local range low into the previous highs might be a good play. Now we have to see if we have enough confluence over there, and then basically from there trying to wait for a good entry signal and bring the price up. Okay, and if that happens, same thing, we can look to short above this highs. Okay, it's a bit more risky, of course. Why? Because we are uptrending. It's clear as day, I guess, at least for me. Yeah, what we've done, just to recap, we touched on the anchored VWAP, on a big important anchored VWAP. We bounced, we changed market structure, we came down, take liquidity, swing failure pattern, the lows. So precise. Look at this. I mean, incredible. And from here we ran to the highs. Now from here, running to the highs and consolidating, it's quite bullish if you ask me. Okay, because we are putting up volume at the highest portion of this range. But we don't have to forget, like, look at here, for example, I did almost the same thing and then straight dump. Okay, well, this was the Trump thing. So anyways, well, what we can expect is to clean the lows here and then rise up. Okay, this is the first play I would chase. The second play would be a short up here, although this we might be very, very cautious and analyze how the market is running there. What does this mean is, okay, let's imagine we come down, take these lows, and then start pushing and pushing and pushing and pushing, like non-stop, with one time framing, no sign of reversal or any range forming. I would not short this. This would be madness, like jumping in front of a train that is going high speed, full speed, right? So what to do then? Well, imagine, for example, that from here we're leaving all this liquidity, and from here we're slowly grinding up, slowly and slowly, and then we have this level. So we have this high here. Okay, now we're going up slowly and grinding, and then from here we start to change market structure and closing 5 minutes bearish candles. We can see now there is a higher likelihood of reversing from here. Okay, of course it's not 100%, it will never be, but there is a chance for that to happen. And yeah, basically we can expect this big range to continue, right? So if we zoom out a little bit, okay, we went up, down, up, down, up, down, up, down, up, down, and clean the lows again. Yeah, who knows? Everything is on the table, even though we have to acknowledge that this market is ridiculous. Like, what is this? I mean, so of course the bullish side will be favored, but yeah, I would really like another low to be made, to be honest, to clean this low. But again, no need for that. Okay, so if we keep consolidating here, maybe tap the low of the range into this highs and then run, I would see this thing, I mean, pushing through the highs again into the next week, and then maybe retesting this area later on. So all conjectures, nothing really. It's a 100% in this game. We have to acknowledge this. We must do it. Okay, so going down into the time frames, let's go to the 30 minutes. We can see that we opened inside previous day range completely, so also previous day value areas. Then we pushed down and up, and we did a whole range rotation twice. So I tried to long this as this range bound condition showed me range boundiness. Yeah, already. But yeah, I already discussed that. And if we actually analyze the volume for the day, yeah, we can see as I said already, we open inside previous day value areas, and we have this naked value area low below previous day low. So this is already a sign that fake out of this low would be actually perfect to tap this level. Okay, this would be amazing to see. Let's hope for this. I already marked this level with an alert. And now we can go and jump into ES, and we can see that ES is doing basically the same thing. The only difference is that it's trading the volume higher up in the chart, while NQ is more towards the lows of the chart, which is not too bad for a push-up. And we can also see how this is manifested in ES not taking the overnight low. I mean the Asia session low during New York. But again, same setup here on the ES. We have this value area naked down here, this supply demand zone that can turn into supply, the single prints here that need to be filled. So this area here, it's a nice area, to be honest with you all. And if I pull the levels, all the levels, you can see I have a few different levels I'm interested in to long. Unfortunately, we did not get the first one, as you can see here. And the second one, which is the one that I like the most, it's down here. We have previous month value area high, single prints, previous swing high before the all-time high. It's way back. Okay, it's a daily swing high. Previous week value area low. So this is a play of price regaining acceptance into the value area of 2 previous weeks profile back. And so I would like to see a retest of this area. And as I already explained, there are also more confluences here. It's the naked value area low, the single prints, the SD flip. So it's a pretty important area. If this area doesn't hold, I mean, yes, I would stretch it until the A session point of control. But if this doesn't hold, even so, I mean, even if we don't do this, okay, but instead we do this, I would expect this here to act as resistance to move price even lower. Okay, hope this is clear, because then at this point in time, let's say we do this, and then we come up to retest this region and to move down. At this point in time, we would have all this section, all this volume here trapped at the highs. Bad thing. Something you don't want to see as a bull. So I would expect at least to fill this whole move to the downside. Okay, so the last push that brought price up here. I would want to see this reversed at least into this area here. Okay, so the anchored VWAP, which would mostly coincide with the, I mean, if this happens up there and there's a bunch of volume coming in, of course this anchored VWAP will keep it rising. And yeah, I would expect this to come into this A session point of controls, and this 2 days prior, which is Monday, actually Monday open in the New York session. Okay, also very, very important. Also backtest slightly below a backtest of the new week's opening gap. This is also something we would like to see. Although we opened already Monday outside of the value areas, and I want to show you this. So this is interesting. This is also playing into the idea of a bounce in this region up, and then up from there. I will show you in an instant. Okay, so let's pull up the weekly volume profiles. Okay, so have a look at this. This is Monday. This is previous week volume profile. Okay, so what happened here? We see that even though for a slight difference, we opened outside previous week value area. Let me remove everything actually. There we go. Yeah, also this one. Okay, so now it's even clearer. Okay, nobody can actually mistake this. So from here we opened outside weekly value areas and we dropped immediately. This was midnight on Monday, so futures opening, and we dropped to retest this point of control area, we could call it. Okay, because you see there's another high volume node here and another high volume node here, which makes the point of control. But price did come down to test this area. Okay, see, and from here it moved up outside value areas, and when it did come outside and make the market structure quite easy now to understand, it backtest again the value area high zone for the actual push-up. So this is exactly what you want to see if you're bullish on the week. You want to see opening, push below, okay, to create a lower wick, then a move higher, changing market structure, retest of a very important support area, and a strong push-up. Like, this is all you want to see to continue to be bullish in the coming day or even days. Okay, what will change though this proposition is what are we gonna do, what's gonna happen in this old profile. Okay, this area here. You might ask, why is this? Well, let's recap a little bit of the theory. Oops, I've muted the mic. So let me lock this. Anyways, so the theory behind this is that price traded in this range here. Now focus on this because this is crucial, like really, really, really important. Okay, price traded in this range for a whole week, and then on Friday it left the range impulsively. So all the volume for this week is put up here. This creates a value area of the 70% of the volume traded during this week up here. All right, so when price, that it's now down here, comes back up and retests the value area, two things might happen. First, a rejection, exactly what we saw, sharp rejection and the revisiting of the lows. Okay, so you can see how clearly this move was. Because two things might happen. First, a rejection, and that we had, and price moved to clear the lows and take the liquidity down here. Second thing is an acceptance back into the value area, and this is exactly what we got here. You see, no rejection, price got accepted. Of course, another resistance point is the point of control, which you can see how perfectly it acted as resistance. Okay, and so the theory says that if price gets accepted back into the value area of the previous range, we can expect price to move to the opposite side of the value area range. So this is again playing into the bullish side, all right, because yes, we could have a rejection from the point of control. This is failed. This is called failed rotation. All right, but one generally would expect a move into the value area high, and from here, then one can assess: are we dropping and revisiting value area low for another test again, or we can break out and keep pushing higher? See, every scenario is possible as of now, but now the highest probability is of a move up into the value area high. That's why I was looking to clear these lows into the value area low of the previous week profile to push up into the value area high. Like this would be my daily play. Of course, the stop loss cannot be set right now because we need an entry trigger and a candle, but then we can have this target here. Okay, so not a bad trade in my opinion, and quite reasonable. All the theory behind is solid. So yeah, let's trade this and see how it goes. So putting back the lines, you can see I have this marked. I have also this marked. Now this must be said. If we're gonna drop from here or from here, or maybe making a new all-time high and dropping, and we do the same thing with this volume profile, what I'm expecting is this sort of thing. And when price will stall below this value area high, then I would expect it to move at least into this. And now this is real opportunity, because this would play in the bigger scheme, in the bigger higher highs and higher lows market structure, okay, and an amazing opportunity to long, okay, into new all-time highs and, you know, and beyond. Like this could be a play a play that you could keep open for weeks. All right, we might not revisit these lows, especially, I mean, I would say very especially if we can below these lows here and we clean this liquidity into this impulse area. Wow, that'd be very, very great. Yeah, I don't know how, the high where it's gonna be made. Well, let's say, let's take this whole range. Yeah, this area here is very much of interest for me, but to be honest with you all, I don't think we're gonna hit this, because let's be honest, we would need an event like this for this to happen. At least not in a day. Maybe today piercing, you know, coming down, maybe next week opening inside, boom, and rest of the week up. Okay, this is more plausible, okay, throughout the next week. But for this week, I would wait for this low to be taken. This would be a great opportunity to move up. And if we keep adding levels, yeah, we can see like how this area here gets stacked again of levels, and this one here too. That was the one that I showed you before, where this impulse started, consolidation down. This is the next area for bounce that I would look for. All right, guys, I'm gonna have a break for the bathroom. I'll be back in a minute. So we just had the market open. So interesting to see, we are seeing a very strong push to the downside. A very wide and strong push. Wait a second. Here we go. Okay, so we had a yes tapping on overnight low. The level we were waiting for even in NQ. It was just a little bit late. Let's be patient. This is a real strong push to the downside. So not really what we want to see for a bounce, but nevertheless, trade setup is a trade setup. Being patient. The target, of course, is, as I spoke before, high up in the chart. Not nice candles forming down here at the lows. 5 minutes is trying to close bullish. But the 1 minute is struggling. Okay, not the worst close. 1 minute to go to the 5 minutes close. I want to see ES regaining this low and closing above here. Nicer now. We can de-risk. I don't want to see price falling below here. This now needs to push. We have a great deal of resistance here at VWAP, weekly VWAP. That we broke this high. Okay, taking this would be 3-1 risk to reward, but it would play short on our bigger target, which would be the overall range high. Here we could target this. I mean, risk is off already, so we could be in for a nice trade. The recovery is doing okay. We are protected from this low here, and the fact that we just pierced through the value area low of the day. Here. So now it's time. It's a thing of, okay, what are we gonna do? We're gonna reject the first big resistance that we find, or we're gonna push through and make it towards the highs. This is trading, my friends. Probabilities. Of course, the highest probability now is to reverse from here. Why is that, you might ask, with all the bullish talk that we had? But just because locally we did low, high, lower low, we might see a lower high to continue further down. This is very plausible. Okay, definitely not something that would impress me. Right, but it's worth it to shoot for the bigger reward. Okay, one thing I am not a fan of all this, it's ES did not go below previous day low, but it did take overnight low, so it might be enough. All right, it might be enough because we took the morning liquidity of Asia. You know, this low, it's not too ugly, and it is a okay low. Yeah, it is okay. We took this liquidity from the Monday 1 hour low, so it's okay. It's good to see. it's enough. Okay, bouncing from the weekly VWAP. So okay, so on ES we are up against that resistance. Let's see. Let's monitor this. Right, we're leaving the value area below us, even of New York. That's also good to see. Let's see the opening of New York. What's gonna bring us? Eyes on the target. This V-shaped recovery is actually pretty good, but there's still a possibility of doing a thing that is called an open, test, and drive. Okay, this would be like this. This of the opening types is one open with a push, a retest of the open, and a drive, all right, which would in this case bring price lower. So let's see if we can reclaim this. And the next area of interest would be the value area high of the day, of course. Let's not forget that we are up against the biggest resistance of this range for now. Not the nicest candles. I'm gonna take 110. You see this? This might keep on pushing, but this trade is already $110 profit, which for my account, which was $1,000.70, you can say, so, $1,000.60 is a 10% increase, which frankly is not bad, right? All right, so let's see, let's check for the next trades, shall we? This was a good one. Shall we recap it? Let's go. Let's do a recap. So what happened? All right, this might be delayed, the stream I mean, but I'll do a recap of the trade. As I was saying, we were looking at this range in the upper side of this bigger range. All right, and what we've done here is basically trading and cleaning the lows, taking liquidity, big push up, and a consolidation. So this is primed for a push to new highs. I took a trade down here on the market open, cleaning previous day low, liquidity for push up, and I opened a contract in the micros. This was the level I was looking for, and when I saw this candle printing bullish, I opened the trade. My entry was a bit late, to be honest with you, and the target was the range high. We were aware of this high confluence area for a big resistance, like the biggest resistance, and I wanted to secure the profits, as they were already nice profits for my trading action. But yeah, I already discussed, and we knew that the highest probability was to reject actually from here in this range. But if we managed to get above this local area of resistance, then we would change market structure by reclaiming this level here. And if we can do this, then the next target is range highs. All right, so one can say I closed too early, and one can be right, but what can I say? Profits are profits, and 4-to-1 risk to reward is pretty good if you ask me. But this candle is looking pretty nice. I mean, this 30 minutes candle, when it's gonna close, if it's closing like this, if any one of you is still in the long trade, stay there. Don't close it. Okay, so now what a trader should do is to record what happened, record statistics, analyze what did good, what did less good, and improve the next time. Like for me, for example, I closed the trade manually over here because I saw that price pierced through the resistances we were looking at, and then it started closing bearish candles below the resistance again. So even though we were discussing this V-shaped recovery being quite nice and bullish, I got induced in thinking that this might be an open test drive type of opening. And what could have been done better was to think that the bigger picture that we were talking about previously is more important. Like what we were discussing here when we were planning the trade about the levels that we were looking at, this to be precise, and yeah, so the previous week high and the previous week value area low, if I can, where is it? Where is it? Weekly profiles. It was on ES. Maybe I'm mistaking the two. Anyways, this was the level we were looking at, and we already discussed the bullishness of this move being that it has moved above the previous week volume profile. Okay, this profile here, see this one here, moving up on Monday, retesting it and changing market structure with a big push and a consolidation. It is primed for this. Okay, so for me to close the trade here, it was a very premature. Like what I should have done better is if I'm long from here, trail the stop, for example, trail it. Well, here we don't even really have any structure to go with, but when this swing has been formed, then the stop could be moved below this low here, and just wait. And when the market structure keep being to the upside, then follow the uptrend. Like here, for example, you know, we are retesting this support. If this candle closes bullish with a small invalidation, 10 points, we could risk a little bit of the profits to keep push higher, to keep looking for higher. Okay, this might be a play. Although ES is way less bullish than NQ in the way it's progressing. But if this candle flies away like this, no, it's not gonna give me an entry. Let's see. Let's see if we can be tapped in from here. Stop below here. We can aim for another chunk. If it comes back. Not as nice as before right now, because it already took it already tapped the daily value area high, so now it's even a little bit less probability than before for this to hold if price comes below here. Let's see. There you go. You see? It already tapped into the daily value area high, so this was less probability to hold, and it blew straight through. Risked a little bit of the profits from before, not a big deal. Could have been slipped away a little bit here. Let's see. Yeah, we lost a little bit more than the stop loss, because we got filled a little bit below. But yeah, we'll see. Let's go. Let's see on to the next one. Sometimes we win, sometimes we lose. And that's the trader's life. ES is consolidating below the daily point of control, which would imply that price will move towards the lows again, and maybe finally taking out previous day low. So if this happens, I would long ES, same play, but NQ is way more bullish in the outlook than ES right now. Let me clean this. Yeah. So if NQ is more bullish, then what can we expect? We can expect ES to drive lower again, clear previous day low, and find a bounce here on the previous week value area low where we were looking at before. From here, bounce, and NQ not making new lows, but maybe retesting previous day low. Okay, so basically we would search for a divergence in price that would look something like this. Like you can see how these two are moving differently now. You see. So in the case ES is preparing for another move lower, which might not happen, of course, but if it happens, I would love to see this and this. Let's take okay, let's mark this. Bouncing, NQ bouncing from this, also this supply and demand. See wicks, never retested. This could be nice. Okay, so let's wait and see. Of course, no trades in between here. this is not a place you want to trade. All right. Why, you would say? Well, we have no highest probabilities here. This is a range in a very low time frame, 1 minute, that if you would like to trade inside and have a reversal from the low and a short from the high, you would have to go down into the 5 seconds chart, which is not what I would recommend you to do. So do not trade inside this. Wait for a break, continuation, and a good level to be tapped. This trade here, we can talk about this in the meantime a little bit. This was a very aggressive trade based on this acting as support, this whole region of the chart, which is the point of control of the day, the weekly view up, the opening of New York for a continuation up, failed. So this, to me, it's saying that this upwards trend is ending. So it was worth the try, even though not the best trades, not the best trade, longing at the highs. Yeah, something you would like to, I mean, you should avoid most of the times. Sometimes it makes sense, but yeah, not the highest probability. So if we're gonna have another ranging day, because this, we have to put this in perspective, okay? We've been ranging for yesterday, the whole day, and the whole morning of today. So if we keep on ranging and we're gonna put on another profile, okay, so let me pull them out. Okay, so we have a profile here, another profile here, another profile here. If we close this day a D-shaped profile, meaning that we're gonna stay all day inside of this range, this is an idea that we might have to entertain, because it's still Wednesday. It's Wednesday, so this means that there's a lot of week to be traded yet. And so if, let's say today we're gonna stay inside of this range and then tomorrow finally pierce it and then push through, Tuesday and Friday, maybe Friday reversing a little bit, now that's something I can expect, in a way, something I can imagine, I can further entertain as an idea. Okay, so if that's the case, we should not target new highs and new lows when in a trade. Like, we can wait for one of those two things to happen, and when one happen and we are in a trade, then we should not target for the opposite side of the range, because most likely than not, we're not going to reach it today. Okay, and we're day trading, so it means that at the end of the day we have to be finished with our trades. So with that being said, let's see what these charts are bringing on, because what I can also see is that NQ already reached our level, while ES did not reach previous day low. It made new low for the New York session with a strong bounce. but not enough for me to entertain a long. I mean, it happened exactly as we spoke. New low on ES, not a new low on NQ, and a strong bounce. I'm not gonna lie. But what's this gonna be? We're at the candle close. 5 points on ES, 25 on NQ. It's a big risk. Maybe too big. And I'm not liking this as a low, to be honest with you. Could be nice push, big volume spike, stopping all these longs. You know, not gonna lie, could be in. The low could be in. But I mean, twice taking overnight low during New York or a bounce, I don't know. That's a first for me. I would rather look into this and say, oh damn, I missed it, rather than take this big amount of risk for something I'm not confident in. Yeah, I mean, not even taking this low. Really spooky. That might be the reason for this push, by the way, because it was, yeah, not so technical, you could say. So catching a lot of traders off guard. Yeah, but I must admit, like this reaction here, very strong. Yeah. But you see here, I mean, if we did not close up here this trade or profits, with the trail stop, we could have been stopped here in profits, which is okay. But staying with the stop loss at break even, my entry was here. So I would have been taken out at entry after seeing what, almost 100 ticks sorry, 100 points, not 100 ticks, 385 ticks, almost 100 points move being reversed, all of this into the entry point. I mean, this is something a trader should avoid, because at the end of the day, if we are not stacking profits, then what are we doing? We must take profits. We must. Otherwise, floating profits are not profits at all. It's like, it's not your money. Now it's in my account, which is still not my money because it's the broker account. But that's details. Like from there, I can in a normal world, I can actually take it into my bank account. So taking profits, it's a practice that a trader must keep on doing, even though many times we are attracted to the idea of making more money from the move, or from our trades, or from our investments, because we see floating profits and we say, oh, maybe it's gonna push higher, maybe it's gonna keep on going. But the fact is that at any time it can reverse and go full direction opposite. Full direction opposite, like draining your account in a day. It doesn't matter the size of your account, the size of the position, yes, it does matter, I'm not gonna lie. But if you're over leveraged, which in futures it's something, it's already built in, like there is no possibility of under leveraging because I mean, I'm sure you're aware, but you're playing with a crazy amount of leverage already. So if you're opening one contract and let's say you have a $5,000 account with one mini, I will show you an example. With 250 points, you would be dead. Your account would be drained. Okay? So let's say you entered short down here before this pump. You got pretty bad trade, but this can happen, all right? So if this happens, you entered short at the top of the move, you would have been down 300 points. And that, you know, it's $6,000. So with one mini, you need actually for NQ is $1,000 margin. All right. So with $1,000 margin, you can lose in a day $5,000. Not in a day. Let me count you this. It was 5 hours of trading. Okay. So to recap, one must take profits when the chance is given, and one must control the downside with the stop loss, risk management, not taking trades that don't make sense, meaning you're risking 1,000 to make 200, all right? No, that's not a good practice. It should be the other way around. It's easier said than done. Okay, while we make a new low, because as I said, I didn't like this. Thank you, markets, for making me right. And so one really should take profits. And believe me, I've done this, I've made this mistake for a long time. I would get into a trade and just wait endlessly for for this trade to be like the monster trade. Like every trade I would wait for it to be the monster trade that would make, I don't know, triple my account, you know, or pay for next year or all the year's expenses and stuff like that. Like that's not the way to be a trader. That's the way to be a gambler. And believe me, you have higher probabilities of making life-changing money by gambling in going at the casino. Like the casinos pay more the lucky ones. The markets pay way less the lucky ones, but it pays way more the intelligent ones and the really disciplined ones. Because when you become disciplined, you know what you're doing and you do everything with the sense, with the mindset that's built through time and repetition, and builds upon experience and data and statistics, then the upside is basically unlimited. Like you could make millions every single day the same exact way I just made $100. Exactly the same. It really does not change in anything. Okay? Okay, so have a look at this. We're piercing through a previous day low, which is nice to see. But this formation here is pretty bearish, okay? So I'm not that fan of a long right now with both of them going into the lows.